Hello, everyone. This is Joshua Hayes of BigWayTraining.com coming to you with our T-Day Tea Party Tax Day Rally edition of our market commentary. Anyway, let's go ahead. I'm going to kind of try to make this a little quick because I don't want to waste too much time on it. But the New York Stock Exchange was up 1.57% today. Volume was lower. The good news about today is that stocks, basically, as you'll see here on the Zoom 9, 5384, 5388, basically almost closing near its high the day today, reversing almost all of yesterday's sell-off. However, volume was lower on the New York Stock Exchange, kind of mitigating the success of today's gains. S&P 500, 1.25% gain, volume lower than the day before. Also, though, near the highs, 852.06, 852.93. That's a good thing to see, but the lower volume is never a positive. Dow Jones Industrial Average, let's pull this up here. You can see lower volume today, strong day, closing at 8029, but hit 8041. Still, the lower volume just keeps on being problematic. Now the NASDAQ, however, kind of showed something that we haven't seen in a while. Look down here below at the white line. Look at the white line below. Look at the breakdown it kind of has over the past low here on the 7th. Now look at the price action above. Notice how price is strong. Tail 1626.80, 1627.72. Almost the high of the day. Off just right around 90 cents. You can see here. Scroll all the way out on that. Oh, it is. Lower volume than the day before. Bigger problem though. Big caps, like the New York Stock Exchange, up 1.57%. The NASDAQ only up 0.07%. So the relative strength line, comparing itself to the S&P 500, took quite a tumble today. Kind of not good. And now let's look at the IBD 8585, only up 0.58. So it wasn't even up 1% today. Wasn't even up half of 1%. So that was under 0.5. See the lagging. Volume slightly higher, but overall, you can see the relative strength line. Look at it off the November lows compared to the S&P 500. Not good. And the S&P 500 is a laggard. So it's really not good. IBD index, IBD 100. Volume's lower. Up 0.79. So it was up barely over 0.50 today. Still lagging the New York Stock Exchange. New York's definitely doing a little bit better than the NASDAQ. Still, look at the relative strength line since the lows. While the S&P 500 is going up to that one moving down, compare the NASDAQ to the S&P 500. So it shows you exactly how bad leading stocks are lagging. Now, let's look at China, see if it's happening all over the place, and see it's not. What's this tell you guys? I don't think it takes a genius to figure this one out. Now, let's look at oil. Oil in between that 50-35 range that I've been thinking, right all the way here, that range here, and then this range about here. Just staying between that for a while. It's going to consolidate. You short-term traders, you know what to do. Short up here, buy down there. I don't do that. Yeah, hate on me now, but later on you're going to find out why I don't do this whenever they can't hold the big winners. Platinum, having a decent day today. Still has an open body bar. Pretty good. Up 1.8%. Continues to hold the March triangle breakout that I keep showing you here. Look at the weekly. Just acting perfect after it gets past the apex. Silver, has it come back to take over the 200-day moving average? Yes. Has it taken out the 50-day yet? No. Keep an eye on that. That's what we want to watch for. Looking at gold. Gold held the 200-day moving average quite well. Still seems to be in a nice uptrend off the November lows. Using a D line here to connect that. It broke down below it. But now, however, using the D line here, if the index can break out above it, that would be good. So you can see here, now that it got past that, the breakdown, lower than that trend line. Now you want it to break out above this trend line. So we'll see if it does. I'm not a trend line player, but that's just one way you could have looked at it. And let's see how the United States dollar is doing right now. And it's holding on to this feeble uptrend. However, this has the feel to me of an ascending pennant pattern, which is not bullish. Normally these things wedging higher. You can see the wedge after the breakdown. Wedges higher, gets trapped in between the lines, eventually breaks down below this line here. Hopefully that doesn't happen. Hopefully it breaks out above it, killing the wedge, but just something to keep an eye on, bottom line. So let's get rid of the D lines there. And then one of the last ones I want to show you is the SOX index. The S&P Philadelphia Semiconductor Sector Index continues to do well off the lows, continues to hold in. Had a down day today, relative strength line holding in, but like I said, the troublesome part is the NASDAQ. You can see there, and then the NDX, NASDAQ 100, excuse me. Show you that chart. Look at the price breakdown there, down 0.44% after being down 1.7% yesterday. Lower volumes is good news. However, relative strength line, weakening a little bit, and it wasn't even nearly as strong as the NASDAQ to begin with, as there was some divergence starting to happen. So kind of just watch how prices act here. We do have one full sell in a small speculative stock, and it had a nasty day today. And the point is that it was just a chart pattern with a little bit of some fundamentals to it. But the point is that it probably had one of the nicest chart patterns out there. Still a very tiny stock, so it doesn't matter really with these. I keep on telling you guys that you need big liquid stocks like ANCI that I showed you. That had enough volume to be a great big long. But but that stock that I was talking about, that stock that I was in for a not so fun ride. Thank God it wasn't a lot of it, so it didn't hurt me too bad. But the point is, nice chart patterns still aren't working out the greatest. So be careful out there, everybody. I'm not even 10% long. I've pared back some longs. They haven't been big longs, but in some of my smaller accounts, like I'm going to make a sell today in a stock that I'm up almost 20% in that I'm not mentioning to subscribers, but I'm going to personally do it in my small account, and you need to be smart and just think about out of the 19 longs I have, which one has been up almost 20% that's up again today on lower volume that I might, want to take profit. Just be smart. It's not it doesn't take a genius to figure this out. So don't be like, Josh, why don't you fully disclose? And trust me, if you were me, and if you saw how everybody did it, you'd want to be careful too with thin stocks. But anyway, big liquid stocks, they're still not out there with perfect chart patterns. So until these big liquid canceling stocks are out there with perfect chart patterns, and until these IBD leading indexes start actually leading, look at that IBD 100 index off the February, March lows compared to the October, November. Look at that compared to the NASDAQ. Look at, it's just ridiculous right now. So we're going to need more time, everybody. So I'm going to go ahead and wrap up part 1 there in 8 minutes. I'm going to be back with part 2 for our subscribers. There is one new long and a long that we are going to add to that's of can slim quality. That's very nice out there. So you better check in for that. But it looks like we're only having part 2 because my first Tea Party Text Day fun little event was very fun, and it had many more people than I thought that it would, and the second one is supposed to be bigger, so I'm going to have to go to it. So part 2 is going to come up right next, but it's going to be short. It's just going to go over the new long, the partial long, and then the full sell, and then the partial sell. Aloha.